jobs during that process is not a good idea either, right?
It's generally not a good idea to change anything.
Yeah.
You know, once your mortgage professional has analyzed your situation, you've both come to a decision on what's going to be the best for you financially, meeting your long and short-term goals. At that point, you really don't want to change anything. You don't want to change your spending habits. You don't want to go out and buy furniture before you're going to move in. You don't want to, take money out of your bank account maybe to buy something. You want to keep everything as much the same as possible, and that includes, obviously, the big piece of your qualifying aspect is your income, your job.
Right, exactly. Speaking of not changing anything, you've had a couple situations, or at least one I know of, David, that they actually went out and borrowed more money or opened up a new credit card or something.
There's, I mean, as much as we try to say, don't make any changes, don't open any new credit cards, don't make any, furniture purchases. Some people have purchased cars right before closing. I mean, these will definitely affect your approval. We've talked about it a bunch of times, but yeah, happened again just recently. It actually wasn't really her fault. It was a card that she has to make business expenses on, and her company always reimburses her, and it just so happened that it was right around the time of closing, and we had to scramble the last second to make it all right. Luckily it worked out, but yeah, that kind of stuff definitely raises the stress levels a little bit, and can just make your life a lot easier by not making these additional payments and charges and whatnot.
The credit docs, or your credit report, once it's been pulled, is generally good for 90 days. However, many times they'll have a pre-closing audit. So
Correct.
They'll
That's
check
where they
the
get
credit,
you.
They'll check that credit report one more time just before closing to make sure nothing's really changed. And if there was a significant change in your credit report, that could definitely affect your approval. So it's something you really want to keep in mind. It's very important.
And what they always look
And
for.
if it doesn't affect your approval, it affects your stress level because now a few days before closing, we're scrambling to gather documentation, right?
Yeah, and all of a sudden that they will see. Did you open a new rooms to go credit card, a new furniture credit card? Did you a new Target card, whatever the case may be, and all those things they have to be accounted for. That's new debt.
And let's not forget, it's very important as well. If your loan officer is, a decent loan officer, they're going to be vested in their client emotionally as well.
Right.
So let's keep their stress level in mind as well.
Right. Yeah.